What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online. As usual, I just had my second purchase on ARK7 go through. I wanted to just talk a little bit about this property. It's not, it's not a new property on their platform. It's one I bought in their marketplace. But I mentioned this a week ago or so. I'm going to try to be picking up their discounted deals a little bit more when they're available. It looks like they're going to be, it looks like they're available more than I realized. And so, just picked up one share of this one. I'll probably, it's going to take me a little while to really figure out, like, how, when they have their bid ask spread, right? And there was one that was at $71 and the rest were at 78. And then there was a bunch of bids at 70. So I just bought the one that was at $71. But then since some closed at 70, I'll probably just put up some bids. I'm just not really sure exactly because it just pulls cash from your account and then it just sits there. I guess I don't exactly know because all the ones that I've had so far have matched right away because I'm just bidding whatever there's an ask at, and so I don't want to just stick a bunch of money in here and then have it be bidding on something that's never actually closing. So I'm not really sure. I haven't figured that part out yet. Any of you that are done this quite a bit more, please feel free to jump in the comments, share your insights on this. But so why this one? Well, one, it was at $71 when I bought it. It's at 70 now. But so for me, it was a market cap about 500,000. Just so you know, this dividend yield always shows at the last traded price. And so this is the yield at $70. My yield is a little bit smaller. It's not a fantastic yield, right? So why am I buying this? Well, for me, it's yield is temporary, basis is forever. So even though this is relatively low yield, it is, it's one that's been out there for a while. It has had a pretty consistent yield, right? I mean, it's actually gone down. But if you look at this, it's not a very big change, right? But it has gone down, and it has consistently paid out. There's not some mortgage that there's some struggle with debt service. And honestly, I wouldn't buy this if I had to pay full price, but with my discount, that's where I think the returns are coming from, right? There's always this argument, like a lot of cash flow investors say, oh, cash flow is certainty, and appreciation is speculation or it's gambling. I don't really believe that. I think actually both are relatively uncertain. I think, a lot more people seem to understand how to figure out what they, how to project their cash flow and not necessarily have a good sense of how, the drivers of appreciation. But I think that both can be, predicted, especially appreciation is one of those things that I think you can predict on a relative basis, right? You can pick markets. This market should appreciate more than that one. Now, the actual level of appreciation might be more difficult. But at the same time, people are wrong about their cash flow projections all the time. Yes, maybe that's what the rent is today. Did you realize your insurance rates are going to double? Did you know your tax rate's going to go up? Or your assessed value, and so your taxes go up? Or you didn't realize you were going to have a 3 months vacancy. So both are equally uncertain, in my mind, right? And so that's why one of the reasons why I am so interested in getting discounted properties is because that's where there's true certainty, right? Like, okay, I know that I am paying less than what this property is worth today, or at least that's, I think that of all the sources of profit in real estate, that's the one you can be most certain of, right? And that's why people say you make your money when you buy. And I'm a real strong believer in that. So, is this a property I would have bought in their IPO? Definitely not. But at a, 29% discount to their IPO, which is not, again, it's not a 29% discount to the real world value, but I'm going to show you what, I do believe it is a relatively significant discount to the real world value. But let's talk a little bit more about the property in general. It's a single family home. It's a long-term rental, 4 bedrooms, 3 bathrooms, relatively new construction, 2021 build. It is in how do you say this? Menifee, California, which according to the ARK7 little video that they do is the fastest growing city in California, which looking at the stats, and I'll show you those in a minute, I think it's probably true. You've got Los Angeles here, San Diego there. It's kind of right here. Location wise, I don't know California very well. A long time ago, I lived in San Diego for, I don't know, a little over a year. But I did not get out much when I was there. So, not a ton of California experience. And then I've done some commercial deals out there, some work when I worked in appraisal too, worked out there. But, this is not a market I have a ton of experience in. As always, looked up the census data. It is, over 32% growth from 2010 to 2020, and it looks like another 14% population growth over the 4 years up through 2024. That's just fantastic growth. And then this is in Riverside County, so I wanted to look up that county, and you have extremely strong population growth in the county as well, not as strong as the specific city. So it looks like we have, really that, which both of those, I like to look at those because it's a driver for demand for single family homes, right? And so and I know California has huge barriers to entry for new construction. So when you have increasing, strongly increasing demand from population growth, and you aren't meeting that with supply, that's why and ARK7 seems to be very focused on picking properties and markets in areas where they think you're going to get appreciation. Again, I think that a lot of these things, it's if I had to pick a place that I thought is going to appreciate relative to other places, this is a city I definitely would pick. Now, obviously, it doesn't mean this year it's going to appreciate, but if you compare it to other properties and in other markets, I can see a strong case for, okay, that's why we want to buy this one, right? And then, but if you look at, Zillow home price trends over the last year, this market's actually gone down 2.5%. And that's just because, it's all about the macro forces and interest rates. And, if you've watched any of my videos, we've seen this price chart over and over again, right? Where you have the strong run up and then the dip and then a little bump here. And it looks like we actually are almost seeing an upward trend at the end of this. So, this is whether or not we see appreciation in the near term. I think it's going to be very much dependent on what interest rates do. But over the long run, I mean, this is a market I'd like to be in, right? From that perspective. Now, I do want to talk about, normally I want to be in places that have stronger landlord-tenant laws, right? It's one of the reasons that I moved to Texas, and it's much easier to be in the real estate industry in Texas than it was in New Jersey or Pennsylvania or New York, which are markets that I worked in a lot. But California, I think, is very similar, right? There's going to be some issues. I think if I am investing in California, this is one of the ways to do it, right? Where it is it's not, I'm doing it through a third party. They're the one that are going to have to deal with all the hassles. They have professional management, that sort of thing. And it's one of the things that I've done with fractional investing is I've really been more willing to take on some risks that I wouldn't take on if I were buying whole properties. And so, in any case, I think there's good reason to want to be in this market. I did my normal due diligence, right? Checked out the FEMA flood map. I wasn't actually completely sure what this effective LOMRS is, but as far as I could tell, we are outside of that anyway, and not in any of the shaded flood zones, because it's not. Sometimes this map doesn't like to load at the same time. But yeah, I think it's that blue line, so I think we're outside of that anyway. Not really sure what it is, but I'm perfectly fine with this flood map. If you were a little bit more concerned, you could dig into that further. Look at the crime map. This, for spot crime, this map looks fantastic, except this is an actual shooting. I looked this up and okay, yes, we had a shooting here. All these other ones, like if you think about the spot crime maps, one, it had to pick a very big area to fill it up, but it also, this is going all the way back. This is going 5 months back almost. A lot of times we're seeing these crime maps fill up with just a few days, right? And then when we zoom in, there's, what is this one? Other. I didn't even look it up, but there's very little going on nearby, according to Spot Crime. I did also look on Neighborhood Scout for this city. This is one of the most dangerous. I couldn't tell, if it's this part right here. I'm not sure. It's either the second most or the third most, but again, these colors are relative to the rest of this city. So just because it might be the most dangerous part of this city, it doesn't mean this is the same as when we're looking at, for some other city, the dark blue, right? And so that's why I like to look at both, kind of get a relative sense of the area. And then let's see, what is there? Okay. And it's safer than 33% of cities, right? So it's not, their crime rate's not fantastic. I'm always surprised by these, right? Because sometimes, especially when I look at these and then compare it to the, spot crimes and whatnot, it just seems like, I guess just I spend a lot of times looking at more dangerous cities, right? Like some of the, denser cities just tend to have more crime, I guess. I don't know. This is something I've never spent a ton of time digging into crime stats. I haven't found, as long as like the specific neighborhood that I've invested in has felt relatively safe, I don't mind going there. That's been my sort of test. I know it's something that a lot of people focus on, more strongly. And if it is, I'm curious, feel free to put it in the comments. What are your thoughts on the crime in this area? Is this something that would deter you? 33% or 33 crime index, right? Where 100 is the safest. Are you comfortable with that or not? Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Some of those are affiliate links and will give you some amount of money on your first investment. Lofty's still doesn't seem to be paying out, although Jerry recently said that they expect it to by the end of the year. I thought that's good news. But you want to do your own due diligence on all of those links and any of the sites, any of the sites or properties. Just because I'm investing in there and providing those links doesn't mean I'm recommending it. Like it might not be a good decision for you just because it's something that I'm doing, right? I'm trying to share with you the way I look at these deals, how I think about real estate investing in general. But not making a specific recommendation for your situation. Also in the description of this video, I have a link set up to the Discord where now over 200 fractional real estate investors are in there. We have discussions on a regular basis on a bunch of different platforms. And so feel free to join that. It's not a sales funnel. It doesn't cost you anything. Just to have a discussion about any of these, it's a very helpful group of people too. We share due diligence info, more on some platforms than others because, for example, on ARK7, we are all competing for the same discounts, right? So, and the same thing goes for Lofty. I think that's why we see a lot more collaboration in like the, Mogul platform is because we're all, everybody gets the same deal regardless on that platform, where on some of these others, there's some competition to snag the cheapest deals. But even with that, we still see a lot of people sharing sharing what they're doing, their thoughts. Because, none of us have enough capital to buy every single discounted token or discounted share anyway. So, okay, that's enough of that. Getting back to this, let's see. I want to talk about, I did a little street view. It looks like a really nice neighborhood, right? It is. I didn't see any signs I didn't see any graffiti. I didn't see any, broken down cars sitting around. It seems like there is a HOA. They seem to, enforce neighborhood standards. So nothing to complain about at all when I did this little walk around here. It's also one of the things that I like to look for is just how congested the parking is in this street, right? And you don't see a ton of cars just all piled up. I think that's a good sign, right? Like when you see neighborhoods like this and there's just, the streets packed with cars, it tends to be a little bit more off-putting. Like when you have tenants and they have to think about, oh, okay, parking here it's going to be tough to find a spot. Sure, they might have 2 garage spaces, but a lot of people, especially for a 4-bedroom home, or 2, they might have more than 2 cars. So it's important to think about, and that's it looks perfectly fine there. And so, okay, I talked about, I think I'm getting a discount on this, right? At $71 per share. And it does just settle at exactly whatever the price is. So there's not, everything is built into that $71. So I spent $71, and there's 7,100 shares outstanding. And so that, implies that I bought this property for $504,000. And that's all inclusive, right? Like if that were my total cost with closing costs. Now, one of the things to keep in mind, ARK7 is making money on this, right? So they are charging, I think, 15% of free cash flow. And I don't even remember, I know I did this in the original video. I think they're also charging something on the sale, right? Which is one of the reasons why, you can't just have a tiny discount. You have to have a big enough discount that you feel like you're making a profit. At least this is what I'm doing, right? I want to have big enough discount that I think, okay, I'm taking sort of a subpar cash on cash return. When I compare this to, my average deal on Mogul, this isn't a great cash on cash return, but I think I'm getting, my basis I'm much happier here than with a lot of those. So, okay, what do they have? So Zillow, okay, they bought this property for $630,000. When this was originally sold a year ago. The Zestimate, though, $597,000. So compare this to that. What was that price that I just said I paid? Let's do it again. 71 times 504, right? So getting a huge chunk of equity right there, right? So let's subtract 597, 800, 93. Okay, and then let's divide that again by 504, divided by 504. Yeah, picking up 18.5%, additional equity. And obviously, if we sold it today, we'd have closing costs. There's not just making that full amount, but it is, it's a significant enough discount that I think we're making some real money there. And so this is what I'm pointing out, though, when I say, like, okay, there, even though, okay, it's a discount to, $71 is a discount to it's a 29% discount from their IPO price. But okay, this sold for $630,000, but they sold 7,100 shares at $100 a piece. So that's $710,000, right? So there's $80,000 over and above this. In costs and expenses that went into that. And that's why you can't just look at your discount from the IPO price. You really have to look at your discount, from what the property is worth today. And that's why, even though it looks like on the surface, I bought this for 29% off. No, but maybe I did buy it for 18 and I guess I did the math the wrong way there, right? I guess I should have said 94, because I did it like as a margin versus as a discount. But so, let's see, 504, 93,000 divided by 597, 800. So yeah, 15.5% discount from the real world value, right? If we believe this estimate. Now, I like to look at other third party estimates. Realtor thinks it's 620, right? 619, 200, and Redfin, and these were all pretty tight, right? Redfin's estimate 620. All of those together, I mean, that's when you have the 3 main third party sites that are pretty tight. I didn't even go beyond that, right? I think, especially because when you have relatively new construction, you've got neighborhoods that have a lot of the same floor plans. this is the type of area where I would trust. I would trust Zillow and those sorts of platforms. Oop, let's go forward here. More in these types of neighborhoods where you have, sort of cookie cutter neighborhoods than I do in places where, you have some have more land than others. Some are older, some are newer. Like this is the type of area where I'm going to just trust those third party sites a lot, especially when they have a pretty tight one, right? I mean, it's all within 20, 25,000 of each other, 20, 23. It's a pretty tight grouping, but again, if this were closer, right? If I were paying closer and I want to be really certain of the discount, I might want to look at that a little bit deeper. Excuse me. One of the things, that has bothered me from the beginning of ARK7 is even though they have a really great user interface. Okay, we've got these charts. Okay, this is the prices. It gives us status. Okay, this is occupied. There's 8 months left on the lease. It shows, okay, I don't know how, half of August, I guess it took them half a month to release it. I'm actually not positive that's what it is. It shows you this historical dividend rate. It's, it's lower today than it had been. Now, this is calculated, I think, on the average dividend, which is 31 cents. So actually my yield, if I look at the most recent, is probably lower than that. They're showing this appreciation, but what's funny is it was bought here, right? So they're just looking at appreciation trends, picking up this 2020 timeline. So I don't necessarily really trust this, right? I don't necessarily think, okay, we're going to continue to appreciate at 6.78% because we had this huge boom time in here. But that's one of the things where, okay, but I do think it's a market, like I said earlier, that should appreciate faster than a lot of other markets because of, the population stats and the barriers to entry for new construction in that market. What else? Oh, but so other than that, though, it's tough to get good info. So this is the November operational update, right? So they tell you, okay, this is the income. So this is what it rents for. If you look at this is a horrible rent to price ratio from the way I look at deals, right? Like $3,200 on, I'm buying it at 504, right? So 3,200 divided by 4. It's so 0.6% rent to price ratio. This is where, if you're thinking about like a 1% rule, this is 0.6% versus 1%. In my market, we're very often finding 0.8%. You're still not finding 1% deals, especially on, relatively new construction like this. But I'm in a market that has strong population growth, has a lot of the things that I think are, creating that expectation of long-term appreciation, although we don't have the same barriers to entry for new construction. So, you expect something a little bit different. But 0.6 is definitely much lower than I would want, relative. If I were buying this strictly for cash flow, and definitely if you were buying this and you had a mortgage in place, you wouldn't be able to make this work at 0.6%, right? Something, even at 0.8 with today's interest rates, you're probably having negative cash flow at like 70% LTV. So yeah, I mean, this is not a deal that I'm buying strictly for cash flow. Yeah, yes, I believe I will get some cash flow. It's tough to not make a little bit of money when you don't have a mortgage. But it's, this is not a slam dunk deal from a yield perspective. That's why I want a discount, and I'm picking one that I think is in a market where I expect to get good appreciation. But I couldn't find this historically, right? Like they're showing us last month, but I don't see anywhere where we're getting the, where I can find this. Like you can see these historic returns, right? It shows you what the dividend was each month. But I don't see anywhere where we're getting this info. And I looked at the charts, right? Don't think I didn't click on that. This just shows it like this. It would be awesome if we had this info at over time, right? So Limus, if you're watching this, ARK7 assist at some point. If we can start compiling this data over time, that'd be super cool. And then these links weren't working for me, so I don't know if anybody else can open these. I don't know if it's a problem with my computer. I did pull open the offering circular. I tried to search for any new reports on Edgar, the SEC website. I couldn't find them, and I don't know. It's really strange to me that I couldn't find them, because I'm sure they've filed a report since this initial one. I would, or at least I'd expect them to have. So I think that I'm searching the wrong name. They changed the name. There's something. But, if you pull up the SEC filing, you get some details about the property. You find out, this is where you find out what their fees are, ARK7's fees and that sort of thing. What they paid for this. There's a lot of info. And so, when I'm looking at these deals, and especially when I'm talking to you about these, I'm not looking at this as a security, right? Like, yes, these are securities. They're filed with the SEC. I'm only talking about the property itself, right? There's definitely, so I'm not telling you $71 is a great price for that security. I'm just looking at what I believe the intrinsic value of that property is divided by the total number of them. But yes, there's more to it than, if you really want to think about, this is where you find out about their free cash flow. I want to say that there's a fee on their sale too. And I don't remember what it is. If anybody has pulled that out, please go ahead, jump in the comments or in the Discord and let me know. I should be a little bit more prepared for this. Sorry that I'm not. My videos have been pretty sparse lately. Just had a lot going on. I'm going to try to get back on this, but it is something, again, if I thought this deal were close, right, if I were getting a very small discount, I'd be more concerned about what exactly that fee is going to be to sell it. But we're picking up over $90,000 in equity relative to what and maybe more, right? I'm looking at the lowest of the three projection or the three estimates of value. And so, the closer the deal is, the more due diligence on the nuance that I'll do. One of the things, this is one of my favorite Warren Buffett quotes from a long time ago. Now I say that and I don't know exactly how it is, but he basically would say, like, the price is our due diligence, right? Like, for certain things, when we get such a large discount, he basically saying, like, we can start to ignore, some of the due diligence we can start to ignore as we're getting a bigger and bigger discount. Now, this isn't such a big discount that I'd ignore most of the due diligence, right? I will, I've glossed over some of the nuance. I know that I've looked it up in the past, and it's not. I just get all the different sites confused. So I should go back and figure out, okay, what is ARK7 charging us on a sale? And I'll next time I do one of these videos, I'll try to remember to add that in there, because I'm going to be doing these more as I think I will, right? It'll just depend on how many discounted shares pop up in ones that I want to take advantage of. Oh, excuse me. I think that's really all I wanted to mention about this one today, though. That, one other thing, they do have like this, if you buy $1,000 in your, they've gamified this quite a bit in a lot of different ways. There's different badges. So now I have the California investor badge and the Atlanta investor badge, or the Georgia investor badge. I don't know which one it was. But then, they're doing like, okay, all these different things and incentives. And if you buy, since I started, like, okay, if in your first month you invest $1,000, we give you an extra $50. Well, I'm not going to be, if I can I'm perfectly happy investing more than that on the platform, but only if they're deals that I think, okay, I'm getting a significant deal, right? I think one of the things that is dangerous about a site that does a good job of creating these incentives to invest is that you're not just trying to hit these different things, right? You're not being affected by that. So yeah, Would I like to get a free $50? Yeah. Am I going to overpay for any of these to do that? Definitely not, right? And so that's one of the things to think about. I also realized I didn't use anybody's affiliate link when I bought this. I screwed up because I know a couple of you guys have affiliate links, when I signed up initially. So sorry about that. But this is one, they do have I think it's a $30 thing if you use the link. Pretty sure I'll put it in the description of this video. I think it's already in there in my videos recently. Anyway, that's it for me for today. Until next time, I'm going to just keep making mistakes so that you don't have to.